Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Now, I didn't start my YouTube channel at the best of times. In fact, the stock pretty much kept dropping as soon as I started getting any decent views. So pretty much this entire time, I've just been trying to help everyone maintain their conviction with Tesla stock and show you financials that matter to distract you from the stock price that doesn't matter. This was intended to help you hold and not sell, and it was even meant to encourage you to buy more Tesla whilst the stock was on sale. I never once suggested any of you should, but showed you that I had so much conviction that I wasn't even buying any stocks, and I was only interested in options due to the extra leverage it generates. Why double your money when you can quadruple it, right? And I appreciate all the feedback that you give me too. And I love hearing how I helped you hold on to your conviction and gave you the confidence to buy more shares, or even get into options and leaps. And judging by all the new Patreons I'm getting suddenly, thank you, it's nice to see all your appreciation. Now we're finally seeing the stock price move in the other direction. Alright, let's just stop and have a chat about the stock price. I want to go over what is happening with the stock price and what could happen with the stock price. I also very much want to hear all your opinions on what you think might happen too. For starters, the major stock price jump we just saw, I don't believe was just to do with Hertz. It's not a rational jump by any measure. This is possibly a major overreaction, or simply a further catalyst to keep the momentum. But yes, of course, Hertz was great news, and Tesla now has TV advertising endorsed by Tom Brady, and it cost Tesla nothing. Have I ever said how much I love this company? Tesla, that is, not Hertz. Although now I love Hertz too. Anyway, the market is in a state of confusion. It knows things are going well for Tesla. It's also realizing how hugely profitable Tesla will be, and it's also starting to realize that the future is electric and Tesla dominates electric vehicles. Now the market is trying to juggle all this knowledge and find the new high. It's just about tested $1,100 and decided it wasn't ready for that, but that's not to say it won't break through anytime soon either. So yes, it's trying to work out the new trading range of the top and the bottom, which is not an easy task for Tesla stock. But we're at that stage where we're going to see some major Tesla events which send the market off into an even further state of confusion, such as Hertz, when the stock price is already on a run and you receive news like that, then it just keeps running. But we also have Texas opening very soon too, which will only further add to the momentum we're already seeing. And of course there is Berlin as well, which will eventually open sometime soon enough. These two factories opening are still up in the air and are bound to be another major force in the stock price. Assuming no major disasters in any aspect, macro or internal, then I would say that a $1,200 stock price is still possible before this year is out. I also think Q4 results are again going to be that much better than Q3, which by the time earnings are announced, we presumably have all factories with vehicles coming off the lines. Then Tesla could really shoot up again. Who knows, 1,500 is even possible when we get Q4 results. It could likely overshoot, similar to what happened in early 2021. I'm waiting for the October Shanghai delivery numbers before I do my Q4 estimate, as we don't know what the run rate is there for the Model Y. We know it's above 1,000 a day, but the rumours of 1,600 may be a little bit stretched. So once we have these numbers, it will allow me to start making a lot more models and forecasts. It's not much longer to wait, and will have an impact on the accuracy of my predictions. But after that, we may see a bit of a lull in the stock price whilst these factories ramp up. We could run into production issues at the factories and 4680 issues. When Q2 earnings are released, profit margins will have dropped, and the new factories might even make a loss, as it will take some time to hit volume production. Of course, can you imagine the FUD headlines already? Especially if Q1 has a lower EPS than Q4, which is highly possible and maybe even likely. These new factories are very big and cost a lot to run. If the production levels are low to start, then it impacts profits. And then you can probably add on to that some FUD, so kind of similar to this year now I think about it. The stock price runs too hot in January, and then there are no more events to prop it up. Then results start to look disappointing, and some bad news, and the stock price starts to cool off. But remember, at the same time, anything could happen. Another stock split announcement. Avis saying they want to order 250,000 Model Ys. Tesla in-house LFP battery day. Cybertruck starting production early. Or a compact unveil. You just never know. Alright, but all those things are likely to happen sometime next year, except perhaps the Avis order, and will add to the stock price. And although the new factories will not look great on paper initially, well, remember, these factories are a little bit special too. They don't just make cars, or at least eventually they won't just be making cars, but there'll also be batteries produced on site too. Seeing 4680 volume production, at least in my opinion, is going to add greatly to Tesla's value. Although the market may have to first see their effectiveness on the profit and loss statements before they're really understood. I think the main thing we'll be watching all of next year with Tesla will simply be the level at which Tesla are ramping up their new factories, along with 4680 batteries. Sure, FSD will also continue to improve, but I kind of feel like Elon has called wolf too many times on FSD and the market is now immune to it. I think it would take regulatory bodies' approval now to give that validation the market wants. But yes, the ramping up of the new factories will be what at least the first half of the year is all about. The Cybertruck in production has got to be another major boost. Anyway, like I always say, make sure you're always invested in Tesla, as you simply never know what can crop up. But as a rough guess, I could see it possible to hit a high of 1500 in early 2022, and will taper off as the excitement cools down, perhaps drop to 1200. But if the FUD is strong and there are other external factors, it's possible to dip below $1,000 again. And if the factories ramp up to what Tesla are telling us, i.e. an eventual run rate of 10,000 a week each, then I think a lot of that will already be priced in. So perhaps next year we might see the stock trading between 1200 and 1500. This might be the new price range, similar to how we saw around 600 to 800 for most of 2021. I know these are silly things to predict. I try to base a lot of these prices on the behavior of the market rather than the performance of the company. I mean, let's be honest though, now the market has shown us they are comfortable with Tesla over $1,000 stock price, that psychology rubs off on us a little too. The confidence the market has gives investors confidence too. For example, right now, I'm sure if the stock dipped below $1,000, then a lot of us would start picking up more stock or options. Say if the price dropped to $950, yet only last month, we weren't comfortable buying in the mid-700s. Even after Q3 earnings were announced, the stock price was still in the 900, yet now we feel more comfortable buying over 900. What has changed? Aside from the Hertz deal, which really has been blown out of proportion and doesn't help Tesla sell any more cars than they would have otherwise, it just increases the waiting lists. Yet now we're hoping for a dip in the 900s so we can pick up more, despite all the opportunities we had recently. Why? Because the market validated it with a higher stock price. The company fundamentals didn't change. This is what the markets do. They work on emotion, not on company performance, like fear and greed, rather than rationality. This is why it is important to work out your own valuation for Tesla, not the market's. The market will eventually catch up over time, which is why you always have to hold. Anyway, I really want to work out my latest valuation for Tesla and can't wait to find out where it is, but I need to get these Shanghai numbers first. We still have all the information from the shareholders meeting and Q3 earnings to add into our models too, so I really am looking forward to seeing the results we get. Anyway, thanks for listening to me all this time whilst the stock price has been suffering somewhat through the year. And remember all the people commenting that stock will drop to $100 or $200 and then they might purchase some shares. And the relentless regulatory credit profits rhetoric we used to hear. Well, I've been hearing this for years. They were wrong then, and they're wrong now. Tesla to the moon. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.